Bank of Canada has raised its key interest rates for the first time after COVID-19. In today's video, we are going to discuss how it's going to impact you as first-time homebuyers or investors. Welcome to Dhesi Real Estate. My name is Mandeep Dhesi. As you already know, this is the first time increase happened after 2018 when we were at the lowest of 0.25% after the COVID-19 pandemic impact. As we know, inflation is all-time high since 1991. After this move, the prime banks like RBC, TD, they have already increased their prime lending rate from 2.45 to 2.7, which is increase of 0.25%. Is the interest rate going to cool off our hot Canadian market? In the typically most two prominent cities of Canada, if you talk about Toronto or Vancouver, the average prices have already crossed $1 million. Even the surrounding cities of GTA, for example, Brampton, Mississauga, we can see that even the townhomes are getting sold for more than 1.5 million. Reason being, there is low inventory of new homes coming into the market, but there are a lot of buyers available. So realtors or even the buyers are struggling to find the right property, and they are always hitting the multiple bidding wars. Second most important factor is delay in the construction of new projects because of the supply issue of the construction material after COVID-19, or if you recently talk about Russian war scenario, so which is pushing the prices up. Everything is getting delayed and there is less inventory available in the market. So it's very disheartening to say that this minimal increase of 0.25% increase in the rate of interest is going to cool off our hot housing market. Now let's talk about how it's going to curb the inflation problem. When the economy is in downturn, inflation is at low point and banks want people to spend more. But in today's scenario, the interest rates went up because bank wants people to spend less, so they want to control the problem of the inflation. So the lending rates goes up, people are borrowing less and they are spending less, which controls the problem of the inflation. But it's not a change which can happen in a single day. The impact of increase of interest rates will be shown in next 6 to 18 months to curb the problem of the inflation. Now let's talk about how it's going to impact your buying power or your mortgage payments as investors or first-time homebuyers. So basically, if you are on variable rate of mortgage, your rate of interest will go up. For example, before the benchmark prime lending rate was 2.45, which is pushed to 0.27, and most of the mortgages or line of credit were at discounted rate of 1%. So you were paying around 1.45% as a rate of interest. Now the same will be impacted in your payments. You will see the increase in the payments by 0.25% with the increase of key bench rate by the Bank of Canada. Do post your comments or thoughts how it's going to impact our economy and the hot housing market. Thank you.